So today we've got 5 stocks to talk about, and I'll also be talking about a stock that could actually come into my top 3 holdings. So not even my top 5, top 3 holdings. And obviously that's quite a big statement, when a stock breaks into those top 3 holdings. Big commitment, that is a stock that I'm willing to put a lot of capital into. Very rare that does happen. The top 3 holdings do change. Obviously, Hims and Hers and DraftKings have maintained those top 3 positions for a while, in the top 2 out of the 3 positions for a while, and then we've seen AMD and Google both flirt with that top 3 positions. Google and AMD making up 3 and 4, but I could see a brand new stock maybe overlap DraftKings and maybe challenge AMD and Google into those top 3 holdings, and I'll kind of talk about that one today. Before we do get into these 5 stock updates and also this stock that might come into my top 3 holdings, just let you know, if you are on the Patreon, I did drop a exclusive video which is the UK portfolio review, and also there's a 2.0 part to that as well, after a little bit of a mistake that I made in that portfolio review. And if you do want to start investing, join eToro with the link in the description. I'm currently a popular investor on there at the moment. So first of all, we're going to do a stock that I've never covered before, I don't believe, in the YouTube channel, which is having a significant drop today, which is Figma. So Figma is currently down 16% at the moment. Obviously, we saw Figma IPO, and when it IPO'd, it actually went to the peak of the high was $142, and since then it has fallen all the way down to $57. So pretty significant pullback on Figma, and even today the stock is pulling back about 16%. They reported their Q2 results, as you can see here, and they actually didn't look too terrible, to be fair. Q2 revenue growing at 40% year over year, with a little bit of a beat over here, and a pretty decent looking guidance at the moment. I think obviously the reason why it's pulling back is that it just went to so significant values after that IPO, and it's having a bit of a pullback at the moment. Now, I actually quite like Figma, and I do like buying companies that IPO, and then they have all the hype, and then eventually the hype disappears. And in fact, sometimes you go from this point of view where there's so much hype, so then everyone just kind of forgets about it and moves away. And sometimes you see significant amounts of drops, 50+% drops on some of these IPOs, and sometimes they end up dropping a bit too low than where they should be. A big one of those is Meta. I don't know if any of you guys remember when Meta IPO'd. A lot of hype, and then eventually that dropped about 50% after its IPO, and then we know the end story so far for Meta, what a performer. But even without talking about Meta, there's been other stocks like Block was a stock I bought after the IPO and made really very good money on. Pinterest is another one. There was a third one, Ferrari, that's what I was thinking of. Ferrari, they IPO'd, and I remember Ferrari dropped significant amounts after their IPO, and that was a significant performer. So watching Figma at the moment, normally I leave it about 9 months before I do go buy an IPO. The reason why is because that would be after the lockup period, where a lot of insiders that were in before the IPO are then allowed to sell the shares. So this is very much on a watch list, and this would come under the category of like a potential stock to identify for 2026. So keeping an eye on that one. So this is how early I start watching stocks. Like some of the stocks that I end up buying, I've been watching for like a good year before I do end up buying them. But yeah, what was interesting about Figma is I did go on the Simple Wall Street forecast, and I don't know if these are correct, because the growth figures at the moment, they're only expecting Figma from 2025 to 2026 to just grow over like 20-ish%, which I'm looking and thinking, I don't know, like the growth rates that Figma are currently on at the moment at 40% growth, will they really slow down by that much? I don't really know. I think that might be a bit wrong from the analysts. The other thing is that I'm looking at the losses here, and there's a significant amount of losses forecast on Figma. And I was looking at this quarter, and this is why I also leave it for a bit longer before buying these IPOs, is just to kind of get the forecasting right, and also to see like consecutive quarters as a public company. And I'm looking here, so revenue is 249 million. The cost of revenue is only 27 million. So the gross margins on this company is 90%. So with 9% gross margins, like this company should really do serious amounts of profitability when it starts scaling up. R&D was 83 million, sales and marketing was 97 million, and G&A was 38 million. So the total operating expenses was 219 million. So you can see here, they actually are at the cost at the moment running at a decent, as an operating company, income from operations, they're actually making decent income from operations at the moment. Other income of 36 million. So income overall was 39 million. They did do a provision for income or benefit, as you can see here. But net income was positive. There's a lot of moving parts at the moment, obviously with this IPO cost and everything like that. So we'll see what it kind of settles at. But this company looks nowhere near like what this is happening at the moment, unless there's just one-off charges really. So yeah, I'm going to be watching that one. But what Figma did end up leaving to happen is it pushed into Adobe, and because Figma was down so much, it did leave Adobe down. What's the Adobe down? Oh, it's actually only down 1% today. It was actually down a lot lower, as you can see. It's a bit recovered as the day has gone on at the moment, which is funny because originally Adobe dropped when Figma IPO'd, as everybody was like, oh, okay. And now it's dropping. That also brings Adobe down. But Adobe is the stock that I am actually considering coming a top 3 holding. I certainly do think it can come a top 5 holding, but maybe a top 3 holding at the moment, because I do look at Adobe and it just seems to be way too sold off at the moment. This was a stock that previously was a $630 stock and now has fallen all the way down to $334. So it's been nearly cut in half. And when you look at Adobe's financials, you'd expect to see something like that showing up in the financials. But if we go from where the stock hit its highs from 2024 really, and even when we last had the highs in 2021. In 2021, this was a $600 stock, nearly $700 stock. If you look at the performance since 2021 and also through 2024, there's been absolutely no slowdown on the financials. I mean, just look at that revenue growth here. Not bad for a company that's supposed to be getting disrupted by AI. You look at the profit growth here. The highs in 2021, they're doing about 5 billion in profitability. They're now doing 6.8, so the profit is higher than where that stock price was in 2021. And you look at 2024, then the profitability was 5.4 billion. It's now 6.8 billion, like we just said. All the metrics are moving up in the right direction. And I love that. I love that when I see a company just financially still no impact at the moment, and yet the stock price is half of where it was previously at the moment. And you look at Adobe, I mean, they're going to close off at 16 times earnings this year, which is only realistically now, 3 months away. And if we look at 2026 numbers, which is what I'm starting to do, because realistically we're only going to be three months away from entering 2026, if they do hit those numbers of 15 times earnings, I mean, Adobe should at least be 20 times earnings. It should at least be the market average valuation. But I argue the case that Adobe should be somewhere maybe towards 25, 30 times earnings. And it's very rare you get a company of Adobe's quality with this revenue growth and this profit growth, these profit margins and this balance sheet, at these sort of levels. And it is very, very interesting at the moment with Adobe. They are set to report their Q3, I believe. So last year they did report the Q3 on September the 13th, which is next week it would fall into if they do report. So we might get another financial update from Adobe. So I'll be really watching that update, because if they come out with another really strong set of earnings, and in the last earnings they reported, they said that we're hiking up the guidance, growth is still good. We actually think AI is going, the reason why we're hiking up our guidance is because of AI, not that it's affecting us. If they do another strong Q3 report, I'm going to really consider really starting to increase that Adobe position. And that will be where I start thinking about coming in top 5 position. The idea where it could come a top 3 position is that Adobe do another strong earnings report, prove that AI at the moment isn't really disrupting them, and the stock goes down. If the stock goes down, that is a perfect situation, because if Adobe was able, from where it is now at $341, let's say it falls another 10% from where it is right now, I mean, you're going to be talking about Adobe where it starts falling towards 13 times earnings. Now at 13 times earnings, that's where I'm like, wow, okay, this is looking good. So Adobe at the moment, I am really considering pushing Adobe up to the top 5 holdings. And if it just gives me another another 10% from here, that's where I'd be, okay, now we're talking about the series, and the financials still hold up, that is. that's where I'd be like, okay, 13 forward times earnings for Adobe. We're talking about top 3 potential now. So next week we might get that. We'll see what happens with Adobe. But that's ones that I'm certainly really watching at the moment. Moving on to the next one, highly requested, Warpaint. Talk about a stock that just can't get a break at the moment. Although it is up today. When I looked this morning, it was down. So it's up 2%. But yeah, the last couple of weeks, it's just bleeding and bleeding and bleeding. Gone from £4 stock into the £2 range. We are now sitting lower than where we were before the whole tariff situation. And now we know the tariff situation, which is absolutely crazy to see. And where we came in at the start of the year, the stock has nearly halved from where we were at the start of the year, which is, yeah, really surprising. Now, we know Warpaint have come out and said, like, you know, the US business has started to slow down slightly. So we'll see if that has continued. And you do get that feeling with Warpaint, is that do the market know something that we don't know, considering how much it's bleeding? Because we saw the last update, and yeah, it looked like they was having a little bit of issues, but nothing to spook the market to send it as where it is right now. And you start thinking, okay, you know, what does the market know something? As we always know, sometimes the market sells things off, and it shouldn't really do. And then eventually the market goes, oh, why are we selling this off? You know, we saw that with Zotefoams. Zotefoams sold it off before earnings, brought out the earnings and the heights of guidance, and the market went, oh, what are we doing here? And then it rallied up 40%. We saw this week with Watches of Switzerland Group, that was the stock that's been selling off. Like, that's been down 30% in the last few weeks. They brought an update out and it was in line, and the language in the update was actually like, it's actually going okay at the moment. Like, positively, you know, quietly optimistic at the moment is what they're saying. So we'll see what Warpaint brings out next week. They are set to bring out their interim results, and we'll see what they do. I think, like, with how the stock is reacting at the moment, you would expect some form of downgrade in there. So I think Warpaint is very much in a Watches of Switzerland Group. Like, if they come in and say, like, oh, you know, that full year guide at the moment, you know, it's been a bit of a slower period in the US, but we're still going to hit our full year guide. That's all they have to do, I think, at this moment, because if they're going to grow profit at decent rates, revenue at decent rates, profit at decent rate, and it's now at 9 times forward earnings, I mean, that is looking good value. What was interesting as well is, you know, another investor that I really like, Paul Scott, he disclosed that he had bought a position in Warpaint as well yesterday, which is obviously another confidence boost to see such a well-respected investor buying into the company. So yeah, we'll see what happens next week, and when we get the interim results next week, we'll kind of look and go, oh, that's that's why the stock has been dropping. The market did know something. Or we'll look at the interim results and we'll go, actually, this is just ridiculously sold off. What is the market doing? So we'll see what happens there. So I don't know if you saw the job data that came out today, but another set of bad job data. The main one that does come out, I think it's tomorrow, is it, that it comes out? And yeah, I think if anything, like it just kind of contributed to the fact, and maybe why the market's just having a little bit of a pop up today, is that that September rate cut certainly looks like it's going to happen, because the economy is certainly weakening with more and more evidence at the moment. And who would have thought? Who would have thought the economy is weakening? How long have we been calling out this for? Like I said, these people that are in these roles, that have the responsibility, the power, and also the wage packets, they should be able to predict this. But once again, we see the Fed being so slow to react. And yeah, it's obviously starting to have the consequences on the market right now, which is, horrible. But it was obvious, like I said, I don't know how me in my spare room here is able to, in my house is able to predict this, what faster than what the Fed is. It's ridiculous. We only had to look at the trend, and we've been saying it for a while. The trend's been going in the wrong direction for a while. And, unfortunately, if you just sit there and let the trend continue and you don't try and stop the trend, it's only going to get worse, and yeah. So more than likely we are going to see that rate cut in September, but it's just, hopefully it's not too late. Jet2 had a pretty bad day today. The stock is down when it loads. It was down about 12% when I last looked. Oh, it's still down about 12% at the moment. Yeah, if you wanted a little bit more warning signs that maybe things are just slowing down a little bit again, look at Jet2. They came out, they stuck a profit warning out in their AGM today. They basically said that the flight-only passengers were still pretty decent, but the package holidays slowed down to only 2%. And And obviously the package holidays are probably the ones that have the better income I would expect from Jet2. Also, when you look at winter bookings as well, they decided to reduce the seats on sale from 5.8 million to 5.6 million for the winter sale. So obviously they think that trend is maybe going to continue a little bit. So yeah, if you wanted to get a little bit more of a sign, and this is obviously more towards the UK side, the consumer's just getting a little bit more conscious about what they're spending, there's another point out for you. I do really like Jet2. It's made me really good money before, but yeah, I don't know if I want to be buying at the moment. Recently, it did have a little bit of a pop off after all the tariff situation, but has since given it all back, as you can see here. So yeah, we'll keep an eye on Jet2 because it is probably the best public airline that is out there. I mean, 6 times earnings, always decent growth previously, great balance sheet, but just a couple of warning signs out there at the moment in the UK economy, and that followed through with another a stock that I own, which is Eurocell. So Eurocell reported today. They also did a profit warning. Stock's only down 3% though. I think the reason why is because the market expected it a little bit more from Eurocell. Because when you look at the whole building space, everyone's kind of been coming out and being like, oh, it's not great. And yeah, we knew Eurocell, because they are more like the home improvements, would maybe not have a great result, and we were maybe just looking for an in-line, and there was a chance there was a profit warning, and we have got the profit warning. So yeah, once again, it's another sign that this housing market is that we previously saw a lot of companies saying like, things are starting to show the green shoots, but there's certainly been an increase now of companies that have gone, actually the green shoots aren't happening, and it's actually slowing down a little bit at the moment. And I think that once again pointed out to, with Jet2 today saying that things are just going a little bit slower. You got Eurocell going, things are just going a little bit slower. Kind of shows that maybe that UK economy side of it as well is obviously not looking great at the moment either, which isn't great. So yeah, just be a little bit aware of that. I think that the time that I certainly think, like with the years that we've had previously in the stock market, I hope a little bit of profit taking has happened. I'm certainly okay that if the cracks are starting to show, I have got the cash pile to deploy if we are about to see a little bit of nerves creep into the market about where the economies are at, if there's going to be a bit of a slowdown period. So we'll keep an eye on that one, but certainly 2 indicators about the economy there. Just giving a little bit of warning signs off today, I thought. Anyway, so yeah, hope you enjoyed the video. A little bit of talk about Figma. Definitely one on my watch list for 2026. Adobe could come in top 5 position. Definitely, well, more than likely could come in top 5 position and maybe a top 3 position. Warpaint, the bleeding continues. We'll see next week if it is deserved. The US job data not looking good. Jet2, profit warning, and Eurocell profit warning as well. So hope you enjoyed the video, guys, and I'll see you tomorrow, where I should be doing the UK stocks I'm buying. Or is it the US stocks I'm buying? I forget which one I haven't done so far this month, but it's going to be that one anyway. Right, see you tomorrow, guys.